Hello everyone, I'm Rob Smith for Smith in the Black VTF here at T3Live.com, and nice trading week. It was awesome, especially if you're a day trader. If you joined me this morning for the morning call, I talked about, as you can see the S&P here, I talked about the lack of shadows or wicks, if you will, in the S&P recently, which has given great day trading opportunities. As you can see here, once again, opens near the low and goes straight towards the highs. So you can't ask for more than that. You know, if you were a position trader, certainly when you get the volatility like this and it drops off like that, certainly more than a few people had to change their pull-ups a few times this week. But all in all, if you're as a trading vehicle during the day, you can just still see how clean this has been. And I talked about this morning, but we can review. It's like, because you can remember how much of a fader market this was, although it marched up. We don't have that. We have these nice, long, clean bars, and that allows you to get a lot of nice, clean stuff. So one of the things I talk about is, you know, and I'm not going to go into my strategy too much. It's just that, you know, I come into the main VTF, and, you know, we're all there, but more often when, you know, people are out of town, like today, so I'm covering in there. So it's important to understand some of the things that I talk about for those who are with us, because when I say something or I'm not there and I type it in, it's going to help you understand what I mean and how you can use it to benefit. So when I talk about the S&P being clean to the upside here on these dailies, which means once this thing opens, recently we're looking to go in the direction that that thing opened, right? And so just today, if you were to look at a 30-minute chart, you can see here how as it went up, it goes up and goes in an inside bar 30, and people ask me about what that means. I said it's an equilibrium because it couldn't go to a new high, couldn't go to a new low, right? And then goes back up. You got an inside bar rejection to the downside. And so oftentimes at this point we're going to ignore the down because we know that the daily looks like this, right? So we're trying to go in the direction, right? So this is just a little small tutorial about, you know, what I say as far as it concerns when we're all trading together. You know, I'm not trying to promote myself, because if you ever hear me hear us talk at live events with myself and Scott and Mark and the others, that oftentimes when people say, what's your A+ trade? And I'll be like, A+ trade is it meets the criteria of my strategy. It's on the price point sheet, and Spurls likes it. And the trade the opening and go play golf or 3 martini lunch guys are already on it too. So when everything is tying up, no matter how you trade, you know, you want to try and use all the aspects that we have. So that's what that means when you hear me saying inside and up 30. Also, the time frame, once again, you'll hear me talk about time frame continuity, and why that's important to us is that when you're getting chewed up, right, as you could have during the week, all right, we're trying to follow which way the direction is going on all time frames. So for a while we had the full time frame continuity going to the downside. When you hear me say continuity, that's monthly, weekly, daily, and 60. And then it reversed and went back up when the SPY here on the week opened at 167.42, and on the monthly here it opened at 168.14. So a bunch above that stuff, we had the full throttle back up to the upside. So we had the luxury of both downside and upside when you you know, and in conjunction I'm sorry, matching up with these long daily bars. So a lot of perfect follow through during the week. So we really like that. Another thing you'll watch on the VTF, and you know, people like to trade the SPY or whatever, and you'll notice a lot of times I'll be trading the UVXY or the VXX, because you can see how much of a bigger percentage move these things are going to have. So if you like the SPY, when it started coming back up, you can see this thing drop from the high 40s all the way back down to the low 30s, stuff like that. So that's just a little introduction about, you know, what we're doing. But we'll get to some of your favorites here. You know, I know it is Friday afternoon and all, but so if we look at SCTY today, this is a real nice one. And you can see how it gaps up, and you know, I like to watch a lot of broadening formations, and so you can see how this did that. Slight lower lows and all the way back up to the slight higher highs. What's in store next, who knows, but certainly a nice move there. So if we take a look at Apple, like I said, we'll get to your favorites and we'll get you out there. So if we take a look at Apple, Apple's going to be interesting coming up this week, and if you take a look here, you'll see this move from the lows here, and then this consolidation here. And so the hopes is that since the move came from here, whenever you see a consolidation, you want to give the direction from whence it came the benefit of the doubt. So in this case, you're going to see up, sideways, and potentially, hopefully, get a nice measured move get blasting back up into the highs like that. We'll see if we take a look at the QQQ. See once again with this real vicious down move and right back up, and this has given us, in many cases, the weekly here. Another thing you'll hear me call is a momentum hammer, and the reason we call this a momentum hammer is because oftentimes in classical technical analysis you hear hammers on the hammer bottom. Well, they can work also within a strong trend, and once again that's the mechanics of what's going on. So here you can see the week opens, drops, and significantly comes back up. So what this represents potentially, because we came ripping back up so fast, is that shorts didn't have time to cover. People getting short up in here all the way down, if they didn't cover and it comes back up in here and starts taking these highs out next week, they can be in a lot of trouble, and a lot of stops will go towards the highs of the week because of that reason, and that's why those things can work doing stuff like that. So if we take a look, let's take a look at the GOOG. Take it, like I said, take a look at all your favorites, and you see the Google spike down right to the bottom of this broadening formation here. See there's support coming off of this stuff all right in here, and once again going weekly hammer for the GOOG, potential triangle in here. Once again, we got a lot of earnings coming out, so we want to be careful of that, but just wanted to run through some of the ones that people like to talk about. And Facebook's been very strong and has had that 1 week rest and now pull back and back up, not as clean as a hammer where you'd like it. And a doji for today, so it didn't really do much today, but we got earnings coming up out of that stuff too. We had MU come out with earnings too, and MU drops off. So the problem you have with an MU now is when you come in next week is you got a bearish engulfing week. It gapped up and came all the way back down. It closes on the lows. So for me, with a bearish engulfer, although the trend is higher, would be looking for short-term sell signals below if you can take that week out. But if it does, it has to stay there. And the reason being, and I talk about the broadening formation support, and you know, there's some support down in here around just below 16, but also triangles here. If it comes, when you see an outside bar, if it comes back into that range, you could be in a lot of trouble because it can triangle right back up on you. And this is back to the SCTY. You can see in here, triangle is breaking here, but when it comes back in, you want to be real aware of that. Right? Bam! And if you can see this is an outside month for the SCTY here. Right? And so that wasn't engulfing, but it was outside. So at that point, it looked a little rough. Went down to here, and you can see at this point that was red. It looked really ugly, but then came ripping right back. That's why you want to be careful with engulfing patterns, that things stay outside and stay engulfed and don't come back in. If we take a look at the gold. Okay, gold has been gapping, and you can see this series here on the 60. I'll show you. See this series triangle here breaks down and just another. So it's been a little rough intraday comparatively to, if you look at this comparatively to the S&P. All right, just excuse me, just tight ranges and dojis, and you know, you get this, but that's about it. But if we look at the inside bar month again, here it's below the inside month. That's important, you know, it's for positioning, and because if you take a look at gold, gold has been very reliable when you look at the inside bars. So if we take a look at this, and you'll see gold coming up, and you got gold inside month to the upside, and then inside month on support goes back up, starts to drop back down inside month to the downside, inside month to the downside, inside month to the downside, inside month to the upside, inside month to the downside as of right now. So one of the things you do want to do, no matter what you trade, is you want to try and look at the charts of whatever you trade to see how reliable they are as far as whatever your strategy may be, whatever signals you're trading, to make sure that it lines up. Somebody asked me today about UNXL, and obviously I like to use inside bars. And what I was noticing when I was taking a look at it, I said, what I like about this is there's a high level of chart reliability as far as I'm concerned, because if you look at this, you can see an inside day goes to the upside, comes up in here, an inside day goes to the upside, an inside day goes to the downside, comes back up, you got inside day here and goes down, inside day here hits support and holds, inside day down here, inside day down there, inside day up there, inside day down there. And so you can see what I'm saying is that whatever strategy you're going to use, make sure that you test it on the specific stocks that you want to trade, because some will be a lot more reliable than others. Okay, other than that, let's finish it off with a little Dow Jones Industrial Average. and talked about this one this morning, and it's coming in right in the trend line. A nice run. The only problem here is we're coming back into the middle of a big range, and we still have earnings. We've got a lot of news out of Washington, hasn't been resolved. So nothing really new until we get some more resolution out of earnings and Washington. So I could go on and on, but for the most part, let's look at the S&P. Like I said, nice return rally back, but still a ways to go to the highs or the lows, and in the middle of the range, and earnings to come out and news, and I assume we're going to find out a lot more about that as things progress next week. I'm going to leave it right there. So after a great week of day trading, and I hope you all had a great week too. Hope you have a great weekend as well. These cocktails ain't going to drink themselves, so everybody have a great weekend, and I'll see you on the VTF Monday morning.